Welcome to How I Raised It, the podcast that goes behind the scenes with entrepreneurs who've raised capital. We uncover the tips, tricks, and techniques they use to get investors to write a check. Strap in and turn it up.
Hi, welcome to another episode of How I Raised It, produced by foundersuite.com. Today I have Joe Mahavuthivanij. Did I get pretty close?
Nailed it.
Okay, of Mythic Markets, coming to us from San Francisco. How's your day going?
Great. Thank you so much for having me on the show.
Yeah, my pleasure. I mentioned I just had an Israeli on the show before you, and his name was much harder. Is your name Thai? Or
It is a Thai last name.
Okay, great, cool. Well, glad to have you here. What is Mythic Markets? What do you do?
Yeah, I guess in a nutshell, we turn high value, appreciating sort of pop culture collectibles and aspects of fandom into publicly traded companies. And so that's really our mission. We're starting off with vintage comic books and collectible cards, and securitizing them with Reg A Plus, and we are making public offerings. These are, I guess, actual IPOs, and allowing both accredited and unaccredited investors to take part in this asset class that they generally know intimately well, and has been outperforming other asset classes.
I was looking at the website. I mean, like, if I can paraphrase, right? It'll be a collection of comics, or I think you had booster boxes of Magic the Gathering on there as a possible offering. You're kind of putting this together, assigning a value to it, and then securitizing that into shares, so I can purchase shares of this collection of, what is it, 1, 2, 3, 4, 5 boxes of Magic Gathering. Is that
right?
Right?
So we've actually completed our first offering about 2 months ago, in August. Well, I guess that's 2 months ago. Anyway, and that was and if you're familiar with Magic cards, that was an Alpha Black Lotus. It
means nothing to me, but that doesn't matter.
So that was like a $90,000 piece of cardboard, and in essentially the way that it works is that we take this asset, which actually is more liquid than most people kind of give credit for. This stuff is actually very liquid, and we wrap a company around it, and that is what's being broken up into shares. We're not actually kind of carving that card up into small pieces of cardboard, and then we securitize it, as I mentioned, with Reg A Plus, and that's what allows us to make these public offerings, because these are in fact SEC qualified securities.
Interesting. And so let's take that example of the Black Lotus card. So who physically owns it, or where is it physically residing? And then where are these shares traded? So
the assets themselves remain in our custody. We vault them, insure them, maintain them, etc. And those are kept in in Oregon, and the owners of that is essentially the owner, or the company that owns, that we spin up, that only owns that one asset.
Yeah.
And then the owners of that are the shareholders of that company.
Okay. And so you're locating these collectible assets and then turning them into a company and issuing the shares. How are you identifying the right assets to be buying and turning into this process, I guess, is a question.
Yeah, I guess, starting from the beginning, we are all fans of this kind of stuff, sort of all nerds ourselves, and have a good understanding of what is going to be very popular, what is of high value, and as I mentioned, in terms of liquidity, this stuff is actively changing hands all the time, and so there's no shortage of sites out there. We can essentially track the daily moving average of cards and comics and stuff like that, and people do invest in them already, and trade them like stock, and they are trading cards, for example. It's kind of right in the name.
And where do they trade? So once you've securitized this Lotus card, what is it trading?
So we are developing the trading platform for that. And so, we're in the process of building that as we speak.
Interesting. What's the argument for, I'm a nerd, or I'm not really, I'm a half nerd. I used to trade, baseball cards and football cards and stuff like that. What's the argument for buying shares of a collectible card versus just trading and collecting cards and hoping they appreciate?
Sure. I mean, I guess the truth is that, like, after you get past a certain value for this kind of stuff, it just becomes out of reach for most people. So, as a sports card collector yourself, if you wanted to, I don't know, own, a very expensive, baseball or football card, if it's 150 or 200 or $1 million, you probably aren't going to go out and acquire that thing and sit on it and protect it and insure it and so forth. And then one day turn around and, like, try to sell it. It becomes in some ways a liability. But these things are effectively pieces of art that are, as I mentioned, appreciating, better than other asset classes, including the market and gold and real estate and things like that. And you can do exactly what you're talking about at the, $5, $10, $1,000 level. But after a certain point, it is just simply not available to most people.
Yeah, no, that makes sense. I think I have a John Elway rookie card. Maybe, I don't know if it's worth $5 or $25, but I get it that I couldn't be buying, really. This is a total tangent. What's the market for football cards these days? My impression is kids don't care, and there's no demand from younger generations. Has that market collapsed?
In some ways, if I'm honest, the thing is that the value of these things is largely based on the popularity of the underlying, in this case football, like
Yeah.
or sports, or and things like that. And so the reason why we've kind of chosen this kind of geek fandom target is it's kind of, things have changed since 20 years ago, when it was not terribly cool to be a geek. But now it's kind of okay, it's accepted, and obviously superhero films and things like that, Pokemon Go, esports even, are driving a lot of that interest into this stuff.
Hmm.
And so a good example might be the original Wonder Woman. Might have been a $50,000 book, before the movie came out. And as soon as the movie came out, you had hundreds of millions, if not more, new fans of Wonder Woman, and that became near $1 million book.
Wow. Interesting. When will you get the Boba Fett doll that shoots the rocket? Isn't there like 5 of them or something? When can I buy shares in that? That's really what I want to buy shares in.
Yeah, I mean, those are all things that we're on the lookout for. We've got a great pipeline of stuff. The Boba Fett that shoots the rocket, that was discontinued because it was a choking hazard and many other things. That variant is very, very rare, obviously, and very valuable to collectors of that kind of stuff. It is something we're always on the lookout for. So
Keep an eye out is your answer.
Definitely.
Okay. And why did you call it Mythic Markets, not just Nerd Market?
So, in our case, especially with the sort of high value, like high rarity of the type of things that we're kind of going into, we sort of are generally like 50K plus in terms of the value of our assets. And, there's different levels of rarity in terms of like what we do. I mean, there's like very common assets, there's uncommon type of assets, then you get into like the sort of the more rare assets. Mythic kind of describes the rarest of the rare and like the highest of the high quality assets that we intend to offer on Mythic Markets.
If I have that Boba Fett sitting in my collection, can I come approach you and sell it to you? Do you want people to come sell you high value assets?
Yeah, I mean, we are definitely looking for all kinds of great things, including that. So if that was something that you had, we'd love to talk to you about a potential deal on that. Yeah, I mean, in general, we try not to acquire off balance sheet. We have in the past, but yeah, in general, like, you know, we tend to acquire on either net terms or on like purchase options.
Well, actually, that is a related question. Your company isn't actually acquiring you're just offering up like an investment banker would offer a company, right? I mean, you're not buying the asset and then securitizing it, are you? Or
It depends on the deal.
Mm.
So, you know, we can do all of the above, but in general, you know, we are sort of not really in the business of, you know, buying these things and hoping they appreciate and flip them. You know, really, we are creating this marketplace for people to, you know, get liquidity. If you did have that Boba Fett, for instance, and you want to sell, you know, 50% of it, that would be something that we can help you do.
Mm. Okay, two questions, and then I want to get to the fundraising. What's the one item or asset that you personally wish you had the most? And then number two, what market or collectible category do you think has the most room for appreciation over the next 10 years?
You know, I think if the SEC and FINRA were listening, you know, they'd probably not be happy with me speculating or opining on some of this stuff. But I would say that, like, you know, we'd love to get, you know, an Action Comics #1, which is the first appearance of Superman. That in a high grade, that tends to be a, you know, $6 to $8 million book.
Wow.
And also the original art of that Black Lotus is something that we aspire to and have our eyes on right now. That's about a $6.5 million painting.
Okay, rephrasing the second one, not what you think is going to appreciate, but what are some interesting markets that are interesting? Let's call it that.
Yeah, so I mean, we're doing some really cool stuff, like with you know, as I mentioned, the geek collectibles, you know, the vintage comic books, collectible cards, and fantasy art and that sort of thing. And you know, but I think like that's sort of past looking at in terms of like these objects that have been appreciating in value over the last 10, 20, 50, 80 years. I think the future of this becomes the opportunity and ability to invest in esports teams, and that's something that we're working on as well.
Yeah, that's interesting, because that could have a actual revenue stream to it as well, not just the appreciation of the asset, right?
That's correct. I mean, we intend to have our collectible assets as well generate revenue. You know, through our fan club experiences, museum, you know, gallery experiences, and stuff like that. But yeah, I mean, you know, esports is growing like crazy. These teams are generating a ton of revenue, and they're popular worldwide, and they have enormous fan bases. So, yeah, I mean, I think like this esports can be the next, you know, NBA, NFL type of thing, but sort of global.
Yeah, that's fascinating. Okay, let's talk about raising money. How much have you guys raised, and how many rounds?
So to date, we have raised 2.25 million, and that was over, I guess, 2 rounds, if you want to call it that. You know, the first was a $250,000 in like a pre-seed round, and then we did a $2 million seed round.
Who did the pre-seed, or was that angels?
So that was a firm out in New York called 3KVC. And you know, we were introduced to 3K through one of my buddies, who's a founder friend who had, I guess, you know, been pitching them, and you know, it you know, happened to work out. It was but I would say that like getting to that point was challenging, to say the least, considering that this was a sort of a weird, and it continues to be kind of like a weird and new market.
Yeah, it is, but I think it's a marketplace, which I feel like marketplaces are pretty fundable as a whole, or, you know, I don't know, maybe I'm
I
generalizing
guess,
too much, but yeah.
I mean, I think the big question is like, you know, do people want to buy small fractions of things they love that, you know, they won't be able to take home with them, you know,
Yeah.
and it's a, you know, a weird new concept that you know, there's a few companies in the space that are kind of pioneering. We're all sort of pioneering this in different asset classes.
It's really interesting. Okay, so 3KVC, do they specialize in pre-seed or do they specialize in markets? Or I don't know. I don't know too much about them.
So 3KVC is led by Shanna Fisher and Alex Binkley. Shanna is, I think first investor in like Pinterest and, on Andreessen Horowitz's board, and and so our don't sort of publicly disclose their portfolio or anything like that. They're pretty below the radar, but very active investors.
Okay.
And it's been a really great relationship, and we're really excited to continue working with them. They specialize, I think if you go by what's on their website, they're looking for weird things to invest in. So 3KVC stands for third kind venture capital. So they're looking for sort of the aliens that walk among us, sort of the those extraterrestrial type of businesses.
Oh, interesting. That's cool. I'll check them out. And how about the seed round? So who read that, or who led that?
Sure. So Slow Ventures led our seed round. And that round came together a lot faster than the pre-seed, certainly. Whereas the pre-seed, we got about 200 no's. We were able to kind of get this round oversubscribed. So 3KVC led, Slow led our seed round. 3KVC followed on. Global Founders Capital, which is out of Germany, also participated, and then we had a number of angels that also participated.
You got 200 no's for the pre-seed. Why do you think that was? Was it just too weird and wild of a concept, or were you?
It was. Yeah, I mean, it was and continues to be, fairly early days for this kind of business. It's only sort of barely possible based on, recent changes in securities law. And so, I would say that, I think the market is now sort of catching on to, what we're doing, and sort of this model in general. And so, it's becoming sort of more accepted and more known as these offerings are launching and successfully funding, and I think people are starting to see that opportunity. Before, it was a very different story. It was new and weird, as I mentioned, and it risky.
Yeah, sure. I can imagine. Like I was saying, all my NFL cards, I haven't looked at them in years, but I'm sort of assuming they're almost worthless. But whatever.
You honestly, like these are the kinds of stories that you would hear about where somebody would go off to college or the military, or just move out of their parents' house, and in the basement or in the attic or whatever, mom threw everything up there, and you came back 30 years later and found a $1 million collection.
Yeah, we had a lot of old comic books my grandparents had at their cabin, but they were pretty well used. They got to be in vintage condition, right? Pretty much.
Well, I mean, that's finding something in a very high quality that's 50 years old is very difficult. But you never know. I mean, honestly, like even those Action Comic ones, the one that was sold for like $5 or $6 million, that was found in a collection, and it was like not torn up, but it was marked up, and pages were folded and stuff like that. And you honestly, you'll never know. These things have become really valuable as these films keep on coming out. Now that Disney owns Marvel and everything else, you can kind of imagine that they'll continue cranking these films out.
Reboot over and over again into infinity. It's kind of crazy. Very interesting. Well, let's talk back to fundraising. In terms of what was your process like? I mean, you had 200 no's, so your funnel for the pre-seed, 200 no's, so obviously your funnel was quite large. How did you kind of assemble 200 people to get a no from?
So yeah, I mean, my background is primarily in product and growth at startups of all stages, and most recently working in venture capital, and was able to amass a lot of relationships through that experience, and was able to understand and learn quite a bit throughout that experience in terms of like how to fundraise, what investors are looking for, how to approach. A lot of those no's were very legitimate opportunities. Most of those no's were absolutely legitimate opportunities that just were just too weird, I think, for most people at the time. That's changing now, but at the time it was just too new, too weird, too unknown.
And so what do you think was different with the seed round, which you said came together pretty quickly? Was you had some products in the market or some?
So no, this was actually pre-launch. We hadn't been trying to raise at the time, but we had been talking to Slow previously, and they approached us and said, hey, we'd be really interested in potentially leading your seed round. I know not really like looking for money right now, but maybe we can bridge something to a seed round, and kind of given that opportunity and also the experience that we had just come off of with the pre-seed round, we didn't want to fundraise in the summer again, which we had done before, and that was no fun. And then also in holiday, it's not a great time to raise, but it was an opportunity to strike while the iron is hot. We didn't need money at the time. It was really an opportunity to kind of come from an advantageous kind of position to get a great deal. And once we had that, sort of that lead investor in, and terms that people, really, liked, the rest of it came together pretty quickly. As the good news travels fast, and then it kind of piled on from there. So we had a lot of conversations with folks.
Is that that's Dave Morin, right? Is he still active there at Slow Ventures? Or?
So Dave recently left for Fund 4. He was active in funds 1, 2, and 3, but for Fund 4, he left the fund to pursue other projects. Sam Lesson from Slow led our round. Oh, yeah. I think Slow in general is primarily made up of the first 5 or 10 people from Facebook, and so it's a great fund.
What value add, here's where you can give them a plug, what value add do they bring? Like, because that's an interesting group of people, right? Early Facebook employees. So what knowledge transfer or other assistance are they sort of bringing to your company?
Yeah, I mean, so they've got, first of all, got a great network, an amazing network, kind of given their past experiences, particularly at Facebook. And I think, one thing that we encountered that maybe we didn't anticipate, I guess, hit us like a ton of bricks, and was that, we encountered a lot of like nerd rage. There was a lot of people that nerd rage. Yeah, there was a lot of people that were not happy with what we were building. I think, they thought in their minds when they saw us coming, down the pipe, like, kind of felt we were probably like Wall Street bigwigs with, bringing in outside money, sitting in our ivory tower on Wall Street, and buying up all of the driving up the cost of being involved in their fandoms.
Interesting.
And that manifested in all kinds of ways, and most of them not positive. Slow's team had a lot of experience dealing with this kind of backlash from releasing things like the news feed and other products like that. and were really helpful in helping us deal with some of these things. People, were pretty angry, with some of those Facebook moves, and they were pretty angry with some of the things that we were doing.
Yeah, that's interesting. It probably brought some good perspective, right? Helped you maintain perspective, I guess, maybe.
Yeah, I mean, it confirmed the notion that I never really want to be famous for anything. I just social media. I I don't know. I'm not active on social media. But it can be very I mean, not just distracting, but
Yeah,
I think it affects your mental health if you pay too much attention to it.
totally. Were you getting personally, not to go off too much of a tangent, but were you getting personally kind of hit, or were they,
Yeah, I mean, I think the worst of it was that we got like death threats, and
jeez.
we were at various shows and stuff to kind of show, like, to connect with the communities, and people were not shy about coming up and telling us that they weren't happy with us. I guess I'll put it that way.
Which group is the most aggro? Is it the Mythic guys or the Superman fans or what?
I think like there's a lot of infighting even within the community. If you got Superman, the people on the Superman side is better than Batman and so forth. But it comes from all sides. I mean, I think that, like, ultimately the lesson learned was that we wanted to show people that we were part of their fandoms as well. We were not
Sure.
those the visualization that they had in their heads. We're a bunch of geeks as well, and we are we want to actually create better access to these collectibles that they otherwise wouldn't be able to take part in. Yeah.
Yeah. Okay. One or two more questions. What are some tips you can provide to fellow founders, maybe who are, have a weird idea, fundraising tips, and anything you would do differently, things you did right, things you did wrong? What can you offer?
Sure. I mean, I think, like, in terms of fundraising tips, it really is a kind of a sales process. So, I mean, I think, like, if people have the listeners have a background in sales, it's very similar, right? You gotta kind of identify your prospects and understand exactly, in the case of fundraising, what firms invest in your type of thing. Which partner you should target, what check size they typically write, uh, who that could potentially provide a warm introduction. Um, Dear sir or madam, and CCing info at every fund does not work very well anyway. Yeah, I mean, make it as easy as possible for not just people to do that introduction, but also make it as easy as possible for the investors to say yes to your business.
What does that mean? What do you think that means? Like unpack that a little bit.
Sure. So, for instance, like, coming from venture, like, some people always ask me, about fundraising, and one question that comes up all the time from founders is, do you know anybody that might be interested in investing in my company? The short
Yeah.
answer is yes, of course, and I think there's an investor for everybody. But now you're kind of making me do the hard work for you.
Yep.
And imagine just kind of asking that question like that, and the answer is, like, sure, but I don't have the bandwidth to be able to do that. Versus the contrast, which is like, hey, Nathan, I noticed that you were connected to so-and-so investor, and I've pre-written the email. I think this partner would be great, and they wrote about something interesting that's relatable to what I'm doing, and so I think they're interested and so you want to be able to take as high a percentage shot as possible, and if they have identified all these connections, the social capital that I have to spend to make that introduction, and the likelihood that they may say yes is greater than like 50%, I'm happy to do that intro. But otherwise, like, it just becomes very difficult to make these introductions or to be helpful, I guess.
I 100% agree with you. It's that question, do you know anyone who will invest in my company? I hate that question. I hate it, because it's a very logical, natural question to ask, right? Like, hey, Joe, you've been in VC, you know people, I'm new to the world, who should I be talking to? But it's not a logical question to ask, but it's like you said, it's asking you to do all the work and also spend your social capital. It's a hard thing to message to founders that that's not the right way to do it, because it's just so natural feeling.
Yeah, I mean, I think you know, a lot of people, I think, may believe that they don't have the network, and it's all about who you know and all this other stuff. I actually don't believe that to be true. I think there's enough going on in, wherever you happen to be, but particularly here in the Bay Area, that you can't go very far. You can throw a stone in this town and not hit somebody that's in the business. Like, somebody knows somebody, and there are unlimited opportunities to network your way into a meeting. And so, just finding out where a particular investor you want to talk to is going to be at some event is not a hard thing to do if you just want to approach them cold. But or you can go to meet other founders or portfolio companies of and network your way into it. It just tends to be very lazy, I think, to it's fundraising is an active process, and you can't really be lazy about it.
Yeah, that's great. Very good. Well, I'll let you get back to it. Where's this money take you? And do you think you're going to have to raise multiple rounds, or kind of what's on the horizon?
Yeah, I mean, I think one of our biggest roadblocks is regulatory, and legal is a major cost center of what we do. And so, we are, like, at the moment in process with the SEC and FINRA on some things, in process with our broker dealer on some things. And so, we are very likely going to have to raise again. We have plenty of resources right now, but I think sometime in 2020 we will be raising our Series A. So,
yeah, great. Good luck. Well, until then, this is an exciting concept. I'll keep an eye out for that Boba Fett securitization. I don't know why I'm obsessed with that, but I want one. So, I'll set me an alert right when it happens. And
definitely. I mean, whether it's comics or Star Trek or Star Wars or Pokemon or whatever, like, we aspire to be able to be like the one spot where you can access all this stuff, even if you don't participate. Like, being able to see this stuff is actually a rare experience in and of itself. And so, bringing it all into one place is something we want to give to fans. This stuff should be experienced by everybody. Indiana Jones, I think, probably said it best. This belongs in a museum in some ways.
Yeah, I like that. Well, that just made me think of a new question. Once you've got 50 or 100 assets all in Oregon, can you create a museum and then charge people admission? Like, what happens when you have all these amazing things?
Yeah, I mean, a lot of these things are already traveling to various shows. So, like, the Comic-Cons of the world, to be able to actually go see your investments. And, a lot of that's really important to like show people that this is, like, real. I mean, it's too easy to, just grab a photo off the internet and tell people, like, hey, you go buy this, like, from us. And, we are building that community, building that trust. And we do intend to create a space for the fans to come and experience their investments and experience their collection, but not just to look at it, but to actually participate in the fandoms.
That's neat. Cool. All right, Joe, on that note, I'll let you get to it. Thanks so much. Good luck with Mythic Markets. And if people want to learn more, it's mythicmarkets.com or .co?
.com.
.com. Perfect. All right, my friend, have a good day.
Thank you so much, Nathan.
Over and out.